we don't really use. We don't get into that much detail in the finance. It's amazing that core. It's like the Pareto rule. Like the core 20% of what we learned in finance, I'm probably using 80% of the time. Maybe it's even more. Maybe it's 10%, 90. Um, and then back to those other areas where I wouldn't have thought that I would be interested in those topics, but like mundane things like accounting. No offense to accounting or accountants, but you know, but it's very specific knowledge, and a lot of times we're dealing with stuff at different types of businesses and industries, and that accounting stuff is stuff that I can look up, and it really helps me understand when I'm trying to interpret a P&L or a cash flow statement or whatever for a certain company. Um, and then, as I mentioned, like marketing and some of these areas that were a little bit more, qualitative than quantitative at the time, that seemed a little bit more case oriented, and hard to kind of figure out how that plays out in the real world when I was in a classroom, is played out, vividly in the real world as I'm making investments and working with companies. You see a case study about a marketing decision about how to, market a certain brand and segment your consumers in a certain market, and then how to, target each of those consumers and look at the efficiency of your, advertising spend. Those kinds of things that were kind of abstract in school. Now that we're working with real companies that are trying to make similar decisions, it's kind of useful to see those case studies. And now it takes on a different life now than it did when I was in class, and it just kind of seemed random. So.
Yeah, I think it's very interesting that you're saying that, because if you look at my company right now, I have one person that is an economist that actually helps me do the modeling and the research, and then I have two people in marketing, right? So it really shows that like we really need to study more marketing, right? And it's like and like you said, I have my whole career in finance as well, right? And my business is mostly finance, but we really need a lot of marketing to boost sales, right? And then and you probably see the same thing in your portfolio companies, right? But you probably see that like from a perspective of return on marketing spending, right? That's like I think your perspective is more to look at how much you're spending on marketing and how much sales you're getting, right? And then you're trying to compare how effective that is, right?
Exactly.
Do you ever get to micromanage to the point when you're looking at a portfolio company that your private equity fund owns, and you see, okay, this strategy is not working as well as we thought? What you guys think that you should do to change it, to improve it? And do you go and say, no, let's go with A instead of B? Or do you leave to like the chief marketing officer, and you very rarely is going to interfere on that kind of decision?
That's a good question, and just specifically through the lens of marketing, let's say, just to back up a little bit, to give a picture of the firm that I work with. It's a firm called PRS Marketing Roster Sherrill. It's a private equity firm formed in 1995. We're a middle market private equity firm, and a lot of companies we work with are entrepreneur-owned businesses where we're the first institutional capital. So we're not doing these, mega multi-billion-dollar Blackstone deals with these, massive public companies. These are typically more scrappy, entrepreneur-owned businesses, really dynamic growth stories, and we're coming in as a first institutional capital. So in a lot of these cases, there actually isn't this chief marketing officer. There might be, a VP level marketing person. There might be, a small marketing team, mid-sized marketing team, and it might be routed up through the sales function. So just to give you a picture, they're not the most, this isn't like Procter and Gamble with like this, PhDs in marketing, super quantitative and metric driven. But now to lay in kind of the response to your question, yes, we often do get involved in, whether it's marketing or other aspects of the business, looking at it and trying to bring analytical tool set and to say, like, like you said, like, where are you spending the money? What kind of what's the profitability? What kind of return are you getting? And in this case, by mode of marketing, different types of digital marketing, non-digital marketing. We often bring in agencies, digital agencies, Amazon agencies, D2C agencies. We bring in marketing and rebranding, firms that help bring in some creative and packaging and other, digital marketing, look and feel aspects to it. So we often bring and try to push, get it more professionalization and sophistication in marketing. But just to tying it back to one of the earlier points we were talking about in terms of the fundamental concepts, it's felt like some of the biggest takeaways I had in going to Wharton with you and learning finance, those foundational things about a finance like return, right? I mean, it really comes down to how do you best measure your return on investments? A lot of decisions, whether operational, marketing, sales, are about asking the right questions and measuring what's the best way to measure. If I'm putting an hour of a resource or $1 of investment into something, what's the return from that? That's such a basic financial concept. And, it's amazing. You'll see companies that have done really well, that have grown at a 20-30% CAGR and, are exploding in their industry. But by the time we invest in them, they don't think that way. And, in terms of the discipline of, should I put $1 of marketing into social? Should I put it into basic digital marketing? Should I put it into SEO? Should I put it into other forms of, marketing like more old school media? Should I put it into trade marketing? Should I put it into promotional marketing at a retailer? Like, there's so many different ways you can spend the money. And that's just marketing. I'm not even getting into sales, and I'm not even touching all the operational aspects of the business. But that basic thing that we learned is kind of the foundation in finance and business. It's not the complex end of it; it's just the basic form of it. Helps us kind of bring some method to the madness in some of these companies that are growing fast, but don't exactly really measure or know where they're getting the best return.
Yeah, this is very interesting because sometimes we have this view that private equity, like New York, even if you're like middle market, because if you think about it, like real private equity is middle market, right? This like behemoth that like when like Goldman has a division that does PE, that's not really PE, right? That becomes like or specs, right? This stuff is not really private equity, right? The way that it was supposed to be, that you get a company and you do an LBO or you do a management turnaround and you try to turn them into a profitable business, right? But what I wanted to say is that, like, yeah, I see that when you start your own business, you're like, you have to deal with so many options that are even less structured than the decisions that you have to deal with, right? And you're saying that like you deal with like entrepreneurs who start their own business, and just to give us an idea, what kind of business? I remember we used to talk about it when I go to New York more often, and I know that I need to go to New York so we can hang out. But what kind of business are you guys investing like these days? And has it changed because of COVID or no?
Good question. So, I mean, just generally speaking, the area that we've specialized the most over the past, for me, 18 years at this firm and a little over 18 years actually, and our firm, since 1995 overall, has been a kind of broad kind of consumer goods and services, including what we would call retail. Now we call it omnichannel, right? Nothing is just retail. You have some D2C, you have some Amazon, otherwise you're not going to survive. And so, whether it's the actual goods, the packaged goods, that a company is trying to sell and market, develop, sell and market, or the retail distribution of that, brick and mortar retailers, again, omni-channel retailers, and then not just goods, but services as well. Like, for example, one of my companies is a fitness club chain. So obviously we're selling fitness, services and so on. So goods and services in the broad kind of consumer spectrum. We also invest in, and this is just where we happen to focus. That's just me and my slice of the pie, our firm. We also focus areas kind of peripheral to consumers. So there's, you think about, and we're investing a lot in the goods and then the actual retailers. You tend to learn about all the distribution in between. So specialty distributors that kind of work in the supply chain, getting from company to its retailers. So we've invested in specialty distributors and also some light assembly, light manufacturing of components that go into kind of general consumer goods. So there's a couple of peripheral areas but all kind of revolving around an orbit around the consumer world. Um, in terms of COVID, it's been a wild, wild ride. I mean, we're sitting here a little over a year ago, and from you think from the consumer industry perspective, it's like apocalyptic. Like the whole country's ground to a halt. Lockdowns and all that stuff. Never seen anything like that kind of an economic disruption. And we went into kind of survival mode, triage. And luckily, we were experienced here. We went through the 08, 09 recession, which obviously hit consumers a lot as leveraged balance sheets, meaning people were had big mortgages and too much consumer debt. And so that was a massive consumer recession. And, the recession back in the early century, beginning of the century. But so we kind of had experience in terms of working with companies and so we knew kind of the areas of focus like cash flow, preservation, operational initiatives, some new things with COVID that were kind of uncharted territory, obviously, in terms of regulations and all that. Working with our financing sources to bolster cash flow, things like that. So into survival mode. And next thing as things started, these stimulus money started coming through. Some of the companies, a lot of the companies we own started doing not just good, but like very well. And, and some of the side effects of like stimulus money coming in and then people having, unleveraged balance